What's up, guys? It's Japarico here. Today we're going to start our lesson 11. But before that, let's ask Camille, what do you remember from the last lesson?
Last lesson, I remember setting the lowest value that you can lose, and also the TP,
Yes.
the thick gain. I don't remember. It's the upper level that you earn.
Okay, very good. So, guys, just to make sure, so the SL is the stop loss, how much money, okay, you're willing to lose. And TP is the take profit.
Take
So how
profit.
much money you are willing to gain and then close the position. Okay. So today, do you remember last time, before the last time I taught you about the 200 moving average?
Mm-hmm.
Okay, so what is a moving average and why? What do you use it for?
It's a line to show the general trend of the previous movement of the stock.
Very good.
Mm-hmm.
Okay. Usually we show that line to show us the trend, how the market is trending, and shows us the support and
Yeah.
resistance levels.
Mm-hmm.
Okay. Let's take a look at the market. Okay. And oops. Mm, Okay. Please show me the 200 moving average. Okay, I'm going to teach you. So you go, oh, okay, this mouse is a left-handed mouse, so the buttons are
Yeah.
inverted. Okay, so you
Understand.
go to indicators.
Indicated.
Yeah, no, just click inside. Yeah,
Okay.
and then here you type moving average. Okay, the first one, that one. Okay, so click on it.
Yeah.
Okay, and then close it.
Mm-hmm.
Okay, here you have your moving average,
Mm-hmm.
but you need to change it because the default is 9. You have to change it to 200.
Mm-hmm.
Okay, so we go to here and click on the settings,
Yeah.
and then you go to inputs, and then change from 9 to 200. Yes, and the style, change the style
Yellow.
to, yeah, yellow. Actually, you can change to any color, but I prefer yellow. Yeah.
Okay.
So yeah, and then okay. All right. So now you have the 200 MA.
Mm-hmm.
Let me show you something that I think is very interesting. Okay. So as you said by yourself, you said this when we were not filming. So you said to me that sometimes it doesn't really have to obey, it doesn't really have to follow that line. Okay. Let me show you something about Apple. Okay. So AAPL,
Mm-hmm.
Apple, okay?
Mm-hmm.
And then if you see it, okay, if you minimize it, and you go from 1 hour, you change the chart to the 30-minute chart, okay? And then you minimize it. What do you see here?
It goes with the trend. It
Correct.
fits the trend.
So what I was telling you, if you use this as a level, okay, so I just said a few minutes ago, support and resistance.
Mm-hmm.
Okay, so what you see here, this yellow line, and you see price going all the way down and then going back up again, and then down and back up. And then what is this? Is this support or resistance?
Support.
Correct. So it's support, okay? And the opposite would be resistance. So if you see a long bearish trend moving from here to down, okay, a very
Yeah.
long one, and then price goes up and then down and up and down, that would be the resistance, okay? In this case, this serves as support,
Yep.
okay? Okay, so when you see a long trend like this, okay, so the first time it broke, okay, it broke here, okay? and then continue here. So
Yep.
if you came from before this very long move, because here you can see from here up to here, you made a very long, okay, move, right?
Yeah.
So from April 20th, okay,
Yeah.
until July 20th, okay? So April, May, June,
June.
3 months, okay? So for 3 months,
Continuous
You-
increase.
and for 3 months you could have continuously made money. For 3 months, can you believe it? Right? Right? Because so far, if you traded the 200 EMA for 3 months, you could have made money because you would wait until price goes back down here, buy, okay, and then sell at a certain time,
Yeah.
which would be your TP, okay, which we will not cover yet in this because we already covered once. But at that time, I didn't tell you exactly at what conditions
Yep.
you should set your TP. You set by yourself. Okay? So far, you know there is TP and you know how to set it, but you don't know like how to calculate it in a way that you can maximize your profit because I haven't taught you. Okay? But so far you already know that exists. Okay? So you know that exists is
Yeah.
already a very good thing. Okay? So, for example, if you bought here, okay, and a certain time here, you close the position, you would have made this much, okay? And then price went back here, okay? If you bought here and close at certain time between here and here, I don't know when or where you would close it,
Yeah.
but you would close it and then you would have this much, okay? So, and this is valid all the time until here.
So,
If you bought here, expecting price would back down to this level and then go up again, okay? But it didn't, now it's down. So far you have bought here and you didn't close, you would have lost this much if you
Okay.
didn't close, okay? So this is when it goes not according to the theory, okay? So far it's not going according to the theory, okay? On the other hand, okay, before this, let's see.
but
Yes.
before that, could
Yes.
you also
Yes.
share
Yes.
that if you have bought the stock at this stage,
Yes.
and you don't know that the next day or like 3 months later it would have increased to up to this point, right? So what would you do? Like so let's say you bought it here. Do you like when would you be selling?
Okay.
Yeah.
I will tell you what I would do eventually. Okay.
Okay.
What I would do when I identify this kind of pattern, I would do once it breaks and bosses back up. So
Yeah.
what I see, because here is doing this.
Yeah.
Eventually, I will wait until it does this. Okay? When it does this, I will close it. Why? Because once it does this and does this, okay, it's more likely it will do this.
Right.
Okay?
Oh, so
Yeah.
you'll buy it if you buy it and sell it even there's like a really slight bump. You wouldn't like wait for like 3 months until it to see that it's continuously going up, then you decided to take your action.
I would have carried, I would have held it
Yeah.
from here all the way here.
Okay.
Because you see, a lot of people would say, okay, if you do this, okay, a lot of people would come to me and say, hey Japa, this is a false break. Eventually we'll catch up and continue.
Yeah.
No, I disagree. Because you see here, right? Even here, right? This is totally different from this. Okay? Why? Because here is not a long-term uptrend. This is not. Okay? This is not.
Yeah.
Oh, see?
Yeah.
It's definitely not, right? It's definitely not a long-term uptrend. It's a long-term downtrend, but it's not a very long-term uptrend, correct?
Mm-hmm.
Here is totally different from what happened before. Understand? So it's more likely you go down and then boom. Okay? And why do I know this? Because here you see the start of this downtrend. Okay? So after a very long downtrend, this downtrend started here. Okay? February 20th. And it ended here, right?
Yep.
That's April, okay, 20th. So that's for 1 month. The uptrend lasted for 3 months.
Yep.
So for 1 month, downtrend, okay? And then you see it broke here, came down, and broke again, okay? So, and after it broke, you see there is always a correction. Oh, see from here? There is always a correction.
Yeah.
Yeah. So here as well, it broke, there will be a correction. So when I see this correction, I don't know if the correction will be up to here or maybe to here, okay? But when I see this correction, then I think that's done. That's done because it will not keep going up again, okay? And of course, I may be wrong. It may be going up again, but it's okay. But it's okay. Even if I'm wrong, I already made this much. So who cares? Understand? That's how, who cares? Because for this much is already a lot of money. Understand?
Yeah.
Oh, for this much. Okay? Let's see, you're going to close here when it bounces back up, okay?
Yeah.
So you already have here 52% profit. This is a lot.
But it's a long wait. It's a 3 months wait.
Yes, but you better make 52% in 3 months than you risk to lose your money in 3 months. You know, these things you better carry for a long time. You better hold it for a long time.
Okay.
Okay. And of course, I wouldn't catch it here. Okay. Probably I would catch somewhere. Here it broke, and then I'll probably catch when it came back.
Yeah.
Okay. So probably I'll catch here. Understand? So even if I caught it here, okay, let's say I caught it here, would still be 41.79%, which is still a lot of money, okay? Yeah. And why did I say this? I said this because once it broke it, you have to make it go up, correction, then you enter. You don't really, why I don't want to enter immediately? Because a lot of times it may be something like this. Understand? So it only goes and then continues, okay? So this thing actually could continue going down, okay? So, and that's why you never enter at the first one, because you don't know what's going next. But this one, you can already enter. Why? Because this one already happened and already broke the 200 MA, okay? Or broke once, continue to on the up side of the 200, second time correction, and then third correction, okay? So you see the third correction. Here you can, how can I say, the probability is even higher here, okay? And then you can enjoy all this move.
Yeah.
Yeah. Following this exactly the same analogy, exactly the same but opposite is the downtrend, okay? So here you see there is only the shadow, okay? So you don't even consider.
Yeah.
Here only the shadow, don't consider. Here actually broke, okay? So broke. Would you enter? Would you sell here? No,
No.
you wouldn't. You wouldn't sell here, okay? So you would wait, okay? And then here there is a gap. Wait until the gap. You made this, bounce it back up. When you see the top, okay? This top here, this top here is actually the support here. Understand? So this is the top, which is the resistance, which is this level of support. Okay? So the support now became resistance. This would be a very nice, very good area for you to start selling. If you started selling here, okay? So if you started selling here, you could have made this. Okay, hold on. If you started selling there, okay, let's say you started selling here, okay? you could have made this much. Okay? And why would I close here? Because I see that it already broke, came back. This is the time you should close. Why? Because you never know. You never know that tomorrow from here would already go up again. Yeah. So if one back up, broke it, and then you close it here.
Yeah.
Okay? And that's why I'm telling you that I'm going to close it here. Understand? It's the same analogy. It's the same thinking. Oh, see? Broke it, came back, close. Because why? You never know what's going to happen. And here, broke it, come back, close. Yeah.
It could have been the same as this one.
Okay, but hold on. Then here is this level. Okay?
Yeah.
So actually it already broke this resistance. Understand?
Mm-hmm.
So once it broke the resistance, okay, then came back. Here, a lot of people would also enter. A lot of people would enter here. Why? Because they can see the 200 MA, they know it's an uptrend, and they know that this one has broken this very strong resistance here. Well, it went up, bounced down, up, on down, up, down,
Yeah.
up, then finally broke here. So
Yeah.
finally break, then come back, then enter here. Then you buy here, and then you can enjoy all this.
Okay.
Which when the chart is already done, very easy for us to talk, right? Because it's already passed. So now, okay, let's finish this class first, okay? So guys, I want you guys to think about it. So think about this lesson and think how we identifying these patterns. So then the next lesson, okay, we're going to have Camille to actually trade it, to see what's going on, okay? Because it's very easy to talk about past. So how about when the chart is still being formed, okay, in real time? That's another story. So thank you. Bye.
Bye.